to everyone here. Today I'm your finance kiddo here to give your daily dose of stocks. So I must say this information before I start. I am not a SEBI registered advisor, and please do not invest in stocks if you don't understand the risk of investing in stocks. And again, I repeat, I'm not a SEBI registered advisor, so whatever I show is my own formulated views and opinions on whatever I say. And yeah, I hope you enjoy the video. So let's start out by have you ever been on a sunny day thinking that my random cousin who always keeps saying he's oh, I invested in Sensex, I invested in Nifty, what is I know what an IPO is, but you are like, I'm confused. What's an IPO? What are these things? Don't worry, Finance Kiddo is here to save the day and make it simple. So, what is a stock market? Let's ask ourselves that question first. Let's first answer that question and then move on, because this is the main core thing. You're investing in stock market. So, let's see. The stock market is where shares of companies are bought and sold. Companies list themselves to raise money. Investors buy shares to become partial owners. So imagine you're investing into a company, stock market. Okay, you're investing into stock market. So there are 10 stocks of this particular company, and you own 2 of them. That means you own a small bit of the company. So then let's look at some major stock exchanges in India. Okay. So first of all, we got the Bombay Stock Exchange. It's the oldest in Asia. So the Bombay Stock Exchange, you might have seen the films such as Scam 1984, or I'm not sure of the real name, but all of them used to happen here. He was a big scamster who did insider trading, which is highly illegal and no one should ever do it. Insider trading is highly illegal and extremely punishable offense. Then we got the NSE, aka National Stock Exchange. More volumes / trading happens here. So the Bombay Stock Exchange, right? It's located in Mumbai, Bombay. So then we got the National Stock Exchange, which allows more volume and trading happens here more. These are regulated by SEBI. So SEBI, right, is like the godfather of the stocks. It regulates all of it. It just like makes sure everything is in order. It makes sure that all transactions comes. So SEBI, right? The full form of SEBI is Securities and Exchange Board of India. So this is India I'm talking about. Then we got popular market indexes, Sensex, top 30 companies on BSE. So Sensex, right? So do you remember what BSE is? It should be on the screen, but I'll remind it to you. It's called as the Bombay Stock Exchange. Okay, so Sensex, it shows the top 30 companies on the BSE, aka the Bombay Stock Exchange. So Sensex has a group of 30 companies on the BSE. Then we got Nifty 50. It rolls off the tongue nicely. So Nifty 50 has top 50 companies on the NSE. So the NSE is the National Stock Exchange, and Nifty 50 has a group of 50 companies on the NSE. These indexes show the overall market performance. So next up, I'm going to say how you can get yourself started in the stock market investing. So I will repeat again, I'm not a SEBI registered advisor. I am not anyone you can take advice from, and I'm just formulating my own views and opinions. So please take this configuratively, as I'd say. So how to start investing? Okay, these are your choices. Please don't listen to me. Listen to a real stock advisor if you want to get real advice, because I'm not advising, I'm giving you useful information, like a storyteller. You like listening to storytellers, but if you tell something fiction and you try to do it, that obviously won't work out. So yeah, to start, open a demat account, which you can get on apps like Zerodha, Grow, Upstocks, then trading account using apps. So you have to do these three mandate steps. So you have to have a PAN card, you have to have an Aadhaar card which confirms that you're a citizen of India. So only a citizen of India can invest in the stock market. Then you must have a bank account. So yeah, once approved, you can start buying and selling shares online. So let's get to know about some important terms to know, shall we? So let's read this, okay? Shares and stock. It's the ownership in a company. So as I told the example before, um, so there's this Coca-Cola company. For example, this is just an example, it's not real. They have 10 stocks. You buy 2 of them. You have a slight ownership in the company. Next up, we have the bull market or the bear market. You might have heard like some people on YouTube saying that the market is going bullish. No, the market is going bear. Like that, if they say, I'm sorry for my English. Like that, if they speak, it means that if the bull market means that the prices of the stocks are going up, but if it's a bear market, then the prices of the stocks are going down. So let's also learn about the IPO, right? So IPO's full form is initial public offering. When a company lists its share for the first time, you market cap. I'm sorry. IPO, when initial public offering, when a company lists its share for the first time. So this one I'm just going to remove because that's a topic for another day, and I want to do a full-sized video on it which we all can enjoy, because it sure is a complicated topic that many look over, but it will definitely help in your stock exchanges experience and make you earn some money. So let's learn about IPO on detail another day. And I totally purposefully did not complete that sentence just so I can remove it and make another video out of it. So then let's learn about market cap. It's the size of the company, like if they're very poor, if they're like a starting company, for example, you started a momos company, like a small company, it's called as small cap, okay? But then it grows into like a decent company that almost 50 out of 100 people know. It's called as a mid cap company. It can also be due to the value of a company. And then large cap is like these IT giants such as Infosys. It can even be like ITC and other things also. Let's also learn about dividends. So profit shared with shareholders. As I would say, if the company earns profit, you get profit because you own a part of the company, and the profit you get is done by the usage of dividends. That means whatever profit the company gets, since you own a part of that company, the dividends give the profit to you. It pushes the profits towards you, whatever you earn. So ratio, okay? This can mean a lot of things in the stock universe, but I'll make another detailed video about that another day. But I'll still say skimmed up meaning. So the ratio means price to price earning, used to measure if a stock is undervalued or overvalued. So let's see how you can earn in the stock market. By the way, I'm not a SEBI registered advisor. I'm just giving my own formulated views and opinions. Please do not follow this. If you are wanting to get advice, please seek advice from a SEBI registered advisor. Please, I'm just giving like topics and information. I'm doing this because if someone accidentally invests thinking that I'm an actual advisor, I would be on big trouble, because I'm not here to like tell you invest on that, invest on this. I'm just here to give you like gems of information, that you might use one day. So we got how do you earn in the stock market, okay? Capital gain, buy low and sell high, okay? So if you buy a stock market for a low price, like you bought something for 50 rupees, then it goes up to 150 rupees. That's a profit right there, okay? But if you buy high and sell low, that's not very good, because if you buy high, for example, you bought for 300 rupees, then you sell it at 50 rupees, it's a 250 rupees loss. We would not want that. So remember these points. Well, no, I can't say that. Okay, now we have dividends. Okay, passive income from holding shares. So now we have to. Who remembers the term dividend? Okay, comment it down. Yeah, I already explained it, so no need. So passive income from holding shares. So for example, you have that's this company worth 100 rupees. This is just an example. Okay, you have 5 shares of it. Okay, meaning you have 50 rupees, you get 50 rupees every, you get 50% of that profit. That's what I'm trying to say. I'm not sure if that's how it exactly works, but yeah, that's yeah. So then we have long term trading versus short term trading. Now that's for the viewers to decide right here. Now word of advice, short term trading has short term trading, it's quite interesting. So that's why I'm going to delete this and leave it for the viewers, you to decide what it is. Leave it down in the comments because I want to see your opinions on it. um, okay, next up, this is a very serious topic. Never invest money you can't afford to lose. So the market is extremely risky. Prices can rise or fall any time. 1 second, boom, you're in a profit. Next second, it will fall down. So if you're down to the last rupee or two, just find another way to use it. Don't invest the money you can't afford to lose. I'm not a SEBI registered advisor, by the way. This is just my own formulated views and opinions. So then research properly before investing. This is a mistake that one of a lot of people, I think, still do to this day. Because see, people, right, they usually just follow the crowd, such as oh wow, this guy bought that company, and that famous guy bought that company, so bought that company shares and stocks. I'm sorry for that mistake. So then he's like, oh yes, even I want to buy that company because they are doing it and surely I'll get a profit. But suddenly you will lose everything. Okay, so then start with small amounts. Do a little bit of dabbling. Like start with 50 rupees, maybe 100 if you're feeling extra lucky. I'm not a registered advisor, please. So yeah, don't follow the crowd blindly, as I would say. This is the it's very interesting. Many people, they just see that, oh my god, this company named Shrikant flower pots is, everyone is buying its shares, so even I should buy it. No, don't do that. You have to research before investing and do your own hypothesis on the company so that you can know if you need to invest or not. Please don't do this. Please don't do this. This is terrible. So then we have Indian stock market growth. India is founding many companies every single day. One day there might be a company where you might think, oh my god, it's just a small tech startup firm. But suddenly, the next 5 years, right, it'll like become so huge. It'll have like $100 billion in profits per second. Now that's a joke. But still, the Indian stock market keeps on evolving. It can either crash or it can either go up. So next, more young people are investing these days. So I would tell that investing from a young age is pretty neat actually. I'm not a SEBI registered advisor, by the way. So investing from a young age ensures that you have the advantage when it comes to the long term investment. For example, you might have heard of the story of Warren Buffett. He started investing at 12 years old. I am 12 years old right now. That's insane. He started investing at 12 years old, and at 40 to 45 age, money started pouring on him like rain on a monsoon day. It's insane. So if you're still young, please, no, I can't say that. So then we got government support plus digital brokers, easy access. Potential for long-term wealth building. This is something I want to remove because I haven't researched about the topic. I have not sure why I added that, but I'll make another video out of it. Then we have potential for long-term wealth building. This is what I said. Warren Buffett. He started investing when he was 12, and he turned rich when he was 40. Like, I'm talking hundreds and thousands of dollars in his bank account. So let's go to the outro. So today we have learned a lot of valuable information, and please remember this: I am not a SEBI registered advisor, and please don't invest in stocks if you don't know how to invest in stocks, or if you don't understand the risks of it. And bye. Have a good evening, night, or day, whatever time you're watching this. And please like, share, and subscribe. Maybe others can also know about this. Leave a like if you did, and leave a dislike if you did not like it. Thank you. Bye bye.